What is going on, guys? Welcome back to Squire Trades, episode 19 of Road to Becoming a Full-Time Trader. It is October 10th at 3:36 p.m. Eastern Standard Time, and today we're going to try doing a little bit different of a format for today's video. This is going to be strictly an educational video. I'm not covering any of my executions. I didn't take any executions today. The silver model didn't present in the AM session. The silver model did not present in the PM session. And my A1 model, the model that you guys most frequently see me trade, also did not present today in the AM. So we're going to go over what my trading model is, okay? What is my model? And this video is going to be titled The Model That Made Me Profitable, okay? Basically, as simply as I can put this, on the 4-hour time frame, it all starts on the 4-hour time frame. Everything starts on the 4-hour time. And what we're looking for on the 4-hour is internal range liquidity to external range liquidity. That's it. This is how you get your bias for the day. Okay? So, real quickly, let's just run over this and see where we can see this in the markets. But before we do that, we need to talk about what is IRL, what is ERL. If you've tuned into these videos before, you will know exactly what both of these are. But for new listeners, let's cover it. IRL, basically PD arrays, okay? And this can be whatever you want it to be. Typically, I tend to stick to fair value gaps only on the 4-hour chart. What is external range liquidity? This is your buy side liquidity and your sell side liquidity. What do I mean by buy side and sell side liquidity? I mean your swing points. Okay, so you can look at this point up here as buy side liquidity, right? You can also look down here. This is sell side liquidity. This is sell side liquidity. This is sell side liquidity, right? So basically just swing points, you know? This is a swing low, right? This is a swing low. This is a swing. Actually, this would be a lower low. So, I mean, it's still a swing low, but you get the point. You can come over here and we can find bullish examples if we want to, right? On our way up, what do you see? Another swing low here, another swing low here. Some ICT traders will refer to these as failure swings. They basically are just low resistance liquidity that's asking to get swept. And when you create them, when you're bullish, right? When we're moving up, when our trend is bullish and we're leaving swing points behind, this is all called sell side liquidity, okay? And then on the flip side, when we are in a bearish trend and we're leaving swing highs, that's going to be called your buy side liquidity. This is all external range liquidity that we're putting in, okay? So over here, we're in a bearish trend, right? Here you have buy side liquidity, okay? Where else do you have buy side liquidity? A lot of it resting right here. Where else do you have buy side liquidity on this trend? You could say some is resting here. In fact, we came up and we swept this buy side liquidity. We stopped out a lot of traders who were short, but guess what ended up happening after this sweep of liquidity? After we came into this fair value gap, guess what ended up happening? We ended up running even more downside, okay? We ended up running this sell side liquidity. All right, so you guys can see, you get the idea of what external range liquidity is and how I use it, okay? Now, the general idea behind this is we have a couple examples. We can use this here as a really good example. If I were to replay this, okay, and you came into this specific trading day, what would you guys be thinking? Okay, here's what I would be thinking. I'm thinking this model, what is my model? Starts on the 4-hour time frame. Internal range liquidity to external range liquidity to get your bias. Okay, where's our internal range liquidity? Well, what is internal range? Fair value gaps. Where's the fair value gap? Fair value gap right here. There's your internal range liquidity. Now, what do we do from IRL? We go to ERL. Where's our external range liquidity? You have it resting right there. You have some external range liquidity left sitting over here. You have external range liquidity sitting over here, right? And these are all targets that in theory you can use as take profits, okay? So that's what I mean when I say you need to be on your 4-hour chart. You need to find internal range liquidity to external range liquidity to get your bias. And IRL is fair value gaps. PD arrays, you can use order blocks. You can use volume imbalances. You can use whatever you would like. I prefer to use fair value gaps. And then ERL, these are your swing points. These are where you look for take profits. These are where you look for the market to draw to. You could call this your draw on liquidity for the day. Okay, and then from here, what happens once we have this checked off? What happens after this? What happens after this, when we have came down into 4-hour external range liquidity and we are moving towards external range liquidity, now you drop onto your 15-minute time frame. All right, and what are you looking for on your 15-minute time frame? You're looking for what's called an MMXM. For those of you that are unfamiliar with what an MMXM is, this means market maker X model. All right, and in this case, X can equal buy or X can equal sell. Market maker buy model, market maker sell model. What is a market maker model? You're probably asking yourself, what is a market maker model? This can be defined by AMD. What is AMD? Accumulation, manipulation, and distribution. What does that look like? Okay, let's draw it. You have, what is accumulation? Accumulation is a fancy word for consolidation. What does consolidation look like? Sideways trading, all right? This is consolidation right here. Let's say, in this instance, you're consolidating, okay? On the 4-hour time frame, let's say right here is where we have a 4-hour fair value gap, all right? So you have a 4-hour fair value gap beneath us. We're consolidating. At this point, what would you want to see? You would want to see manipulation. What is manipulation? Manipulation is a liquidity sweep. Then you would want to see a reversal and continue on and on and on to your external range liquidity, okay? And realistically, you would have an external range target up here that you would be targeting, okay? So this is consolidation. Accumulation equals consolidation. Let me break this down. Accumulation equals consolidation. Manipulation is what you would call a sweep of liquidity. And distribution is when price actually runs in the direction that you want it to do, in the direction that you want it to go, right? So this is your accumulation. This is your manipulation because you have sell side liquidity here. When you sweep this sell side liquidity and you come down into this 4-hour fair value gap, now you're looking for longs, right? Now this is what you're looking for. So consolidation, boom, boom, right? And this here, this blue trend, this is the 15-minute chart. So this is your fair value gap. This is your consolidation. Once you sweep 15-minute sell side liquidity, you dig down into your 4-hour internal range liquidity. Now you're targeting your external range liquidity, okay? And let me move this, and I'll show you guys a little bit better of a drawing as to what you're looking for, okay? And you can be playing with the trend. You can use this against the trend. It kind of really just depends where your 4-hour fair value gap is, where your 4-hour internal range liquidity is, right? So realistically, what this would look like beforehand is you would have a move down, and then you would come into your consolidation. And when you're consolidating, then you would manipulate and we would reverse. This is all on this. These blue lines are your 15-minute chart. And you want this is what you want to see when you come down into the 4-hour PD array, the 4-hour internal range liquidity, right? So this is your consolidation zone. Boom. This is your manipulation leg right here. Let me see if I still have the template for manipulation. I do. Manipulation. And then these over here, what did we call these earlier? We called these external range liquidity, which could also be called buy-side liquidity, right? Boom, buy-side liquidity. And you can have as many of these up here as you want. And this is where you stretch your risk to reward, right? This is your buy-side liquidity that we're going to go and end up sweeping. This is beautiful. This is the model right here. You are in a trend, and you can catch this as a reversal. You can also catch this as a continuation. So let's say that we were consolidating here. Let's do a different option. Let's show one where it's a continuation, okay? So let's say price has been moving bullish, right? Price is moving bullish. You're retracing. It looks really good. But then price starts to consolidate up here. So what would you guys be thinking here? You would be thinking price cannot reverse out of consolidation, so you would want to see movement higher, right? What's probably going to happen before we move higher? We're going to sweep sell-side liquidity before we continue our run. So this is what it looks like when it's a continuation. You're in a trend, you decide to consolidate. What happens after we consolidate? We come down, and all of these swing points right here, this is all sell-side liquidity, okay? These are all stops resting right here. And then what do we want to happen? We want to run those stops, run that sell-side liquidity. We want to continue. You're going to create a fair value gap right here. And then once you've created a fair value gap, what you are going to do is set your limit at the top of the fair value gap, set your stop down here, and you're going to continue running however far you may run. So that's pretty much what the model is, guys. Our model is built off of 4-hour PD arrays, 4-hour fair value gaps. It's built off of the 15-minute chart. We want to come down, we want to consolidate, we want to run liquidity. When we run liquidity, we want to run it into a 4-hour fair value gap. And after we sweep all of that sell-side liquidity, after we hit all of those stops, then what do we want to do? We want to see a reversal. When we reverse, you want to see a market structure shift fair value gap. When you create a market structure shift fair value gap, in this case, your market structure shift would be created here. When you create this market structure shift, you want to see a fair value gap. You want to see the market displace. Then you're going to have your fair value gap created right here. Once you have that, you place your entry at the top. You place your stop at the nearest swing low. And then guess what's going to happen? You've got your TP1, wherever your TP1 is. You've got your TP2 wherever your TP2 is, and so on and so forth. So that, very briefly, guys, is the model that I trade. That's the model that my partner and I have built. We've been studying ICT I've been studying it for a little longer than he has, but our combined experience makes up quite a few years of trading this stuff, guys. And this is the model that has led me and led him and led the two of us working together to our first payouts. I have now reached 2 payouts. I should be requesting a 3rd payout next week on the 15th of this month to reach my 3rd payout ever, and then so on and so forth. And we're going to continue trading this model, and we're going to live by it. We're going to die by it. And this is what has got us there. Thank you guys for tuning into this episode. If you have any questions, feel free to leave them down below in the comments. If you would like to ask me questions in real time, I will leave a Discord link down below in the description. You can join that Discord. You can @ me, talk to me, ask questions, chat about the market, whatever you'd like. My @ is Squire. That is @SQUIER in the Discord. Feel free to @ me. Feel free to talk to me, whatever you guys like. Thank you for tuning in. It's been Squire Trades. We will see you guys tomorrow, back with the 19th installment of Road to Becoming a Full-Time Trader. You guys have a great evening.